Bienvenidos al seminario web. Ha entrado como asistente en modo de solo escucha.
And we will be starting in approximately 10 minutes. So I'm just getting set up right now. Just want to welcome you to our class, Fernando. If you have the program or if you have any questions, just go ahead and type them and I'll do my very best to answer them. If I can't address the questions properly, I'll get back to you via email or something of that nature. Testing 1, 2, 3. If you can hear me, just type on the chat room hello or something, just to let me know that you're here. We'll be starting here in approximately 10 minutes. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3. If you can hear me, let me know. We'll be starting here approximately 8 minutes. Testing 1, 2, 3. Hello, welcome to the class. If you can hear me at all, Alessandro or Fernando, let me know. Just testing to make sure the software is working correctly today. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1 2 3. If you can hear me, let me know. Testing 1 2 3. Just doing a mic check. We'll begin here in about 5 minutes. Testing 1 2 3. Hello, can you hear me? Testing 1 2 3. Testing 1 2 3. Doing a little mic check. We will begin here in approximately 2 minutes. Just making sure anybody can hear me. Testing 1 2 3. Testing 1 2 3. If you can hear me or if you can read the chat, let me know if you can see anything. I typed a welcome and to let you know we'll be beginning here just shortly. I just want to make sure that everything's working this time. Thank you so much, Chuck. About 1 more minute, we'll start going into our presentation for today, or we'll share it. We should get going here very soon. Thank you. Okay, I want to welcome you to the Dynamic Trend class for today. And in our class today, we're going to go through the new features of the program. We're going to give you a little bit of an update on those features and just share with you what we've talked about over the last month. Elliott wave, turning points, TOMS, strength level, the option volume map, and group rotation are the primary focuses in this class over the last several weeks. And what I've done is I've tried to introduce to you each individual feature, and I've tried to share with you how to use those features to the maximum potential. In addition to that, how can we filter out those signals that might not be the best or the most appropriate at any given time? And so what we do is we take the tools that are available in this advanced features that we've just added, and we can also go and try to do other things in addition to what we're going to cover here. So what I want to do is just review. I think it would be appropriate to go and review the symbols that we've talked about, some of the examples that we've talked about over the last few weeks. I have kept a record of it in a log, and so I think that would be a better real educational example if we go through this systematically. If you have any questions and I don't see them, I apologize. I'm trying to multitask, but I will get to your questions as quickly as I can. If I am not able to answer them, what I will do is I encourage you to send me an email at marcus@dynamictrend.com, and I promise to get back to you as quickly as possible with a more detailed answer. So my time is short, so I'm going to get going into the program. I believe at least one person here, I recognize your name, and you're a new person, and I also know you from other classes with eSignal and Advanced Get. So I want to welcome you, Alessandro. And if you have any questions, just please let me know. To begin with, the program, just as a quick introduction for those that are at least one person who's totally new, the program is designed to enable you to look at different types of applications. If you're into charting, we have a charting application. If you're a trader and you need to make quotes to keep track of things, we have a quote page. We have a scanner, if you will. We call it a matrix. It's designed to help us find types of trades or setups that are representing what our style of trading. So we have that. That's called the matrix. Then we have the additional features that any option trader would be interested in using, something of the nature of a chain, option chain, a spread select. And then we have a unique feature called Strategy Builder, which I can show you how to apply that in the class real time. We have the risk graph, which predominantly most option traders know how to use, and we have a few ways of using them, making that tool more powerful than a standard risk graph. And then skew charts for those interested in trying to optimize the best time and price to manage their options or to initiate options positions. Another feature that we have that is new, or actually not new, but it's a very powerful tool that I don't think you'll find anywhere else, but it's basically helps us identify the issue of where's the money flowing in the market at any given time. And that feature is called our group rotation. The decay feature and then also our price projection tool, which is a proprietary calculation that we are currently having patent pending. It's like a risk graph, but it's more interactive, and it allows you to put up multiple combinations of possibilities up to the very point of expiration on options. So what I want to do today, though, is I want to focus on the new features, and I thought the best way of doing that would be to highlight the things that we've discussed in the past. It's real easy to bring an example after the fact and share with you what is a good setup, but we can pick and choose things. What I've done is I've actually talked over the last 4 to 5 weeks, and I've kept track of them, and then I've followed up on. I want to follow up on them and show you exactly, not in training mode, but in real life, what these stocks actually did. And we're primarily going to be focusing on 4 tools in the program. Number one, if you go look to the right on the chart, I'm going to blow up to a full page. This is just a stock that I've traded over the last year, and I'm still familiar with it. I'm still tracking it, and so this is an example of an idea. I want to continue to get into this stock again. I believe there's an opportunity here. to make some more money this year. So what I've got is I've gotten set up on the screen this chart called Holly Frontier. It is a refinery stock, if you will, an energy-related stock. And what you see on the right side of the data, after the current data bar, you see the Elliott wave turning point. That's represented by the, actually, let me just turn off some of this and I'll just show you, make sure you can see it more clearly. I'm going to turn off the option volume map, and I'm going to turn off remove some of these studies here. Just so that we can go see how for the brand new person, so we can see exactly what we want to systematically put these tools together. And then let me just remove all the studies. This is a blank chart. This is your data. This is your market on any given day, a daily chart, open, high, low, close. We have 4 different types of styles of charts. You can have an open, high, low, close chart, and a coloration of an open, high, low, close chart. I forget the exact names of them, and then a candlestick, which is what a lot of people use. For this demonstration, I'm going to use a candlestick. Normally, I would use an open, high, low chart, but I believe that this is what most people would be interested in. And then we have, line charts, and we have mountain charts, or area charts, as they're called. So, to begin with, what can we do if we want to use the advanced get features that will help us guide us in some trading strategies and logic? The Elliott wave turning point is our background, our strength. We are the developers of advanced get years ago, and our strength has always been Elliott wave theory. And what we're doing is we're looking for trends, and we're looking to trade a trend. We're looking to participate in a trend in the strongest areas, and we want to buy them at the appropriate pullback. If a market is not trending, we want to know that. If we want to know when to buy it, and how can we catch trends. In Elliott wave, one of the problems with it is there's about 9 different levels of wave counts, if you will. It can get very cumbersome and very confusing at times. After over 2 decades of research and work, what we have done is we have taken the logic that goes to helping trade these so-called Elliott wave trends at the early stage, mid-stage, later stages. We've been able to identify different ways to trade them. We've developed an algorithm that helps us find 5 different types of trades using primarily Elliott wave theory. We don't label the wave counts. We don't put all the complex things that go with making decisions. We try to make it simple and short and sweet. How can we get long? If we do, what would be a potential stop loss? Or how would we cancel the trade out? And what kind of targets will we be having? What is appropriate risk versus reward issues that we need to deal with? So in general, that's what you're seeing here is there's many ways that we can trade. We can turn on, for example, the traditional way of trading. We can go in and we can look, for example, this program will identify pivots. I'm going to turn on pivots for you. And we can apply things like the traditional technical ways of trading, like Fibonacci. So I can go in here, put a Fibonacci retracement on, start with the stronger trend pivot point to the current pivot point. And in this example, you can see this on this daily chart, this stock has retraced approximately a third, a minimum of 38%. And that's how a lot of people will make decisions of trading. I look for an appropriate pullback within a trend. The Elliott wave concept does it even deeper. There's many ways that we can trade. We could trade moving averages, we could trade fib numbers, and on and on. Each person is going to have different ways they trade based on their style, their preference, their experience and personality, and so on. And so here what we're going to do is we're going to simplify that. You can still do your own thing, if you will, but how do we start to trade more in a way that's a manageable, controllable, risk reward orientated way? So we'll go to the right click on the chart, go to the selection that says add study, then go up to, in this case, look for DT Elliott wave turning points, select it. What you will now get is a menu that you see in front of the screen. In that menu, you can see 5 layers of trade opportunities potentially based on whatever style of trader you are, whatever your preference is, whatever your personality indicates, what makes you tick. If you're an aggressive trader and you want to trade just very short term, as quick, you get in and out as quick as possible, and you're willing to take a little more risk, then you're going to look for something that we would call the dynamic type of trade. It's on the far upper upper right corner of this menu here. It's basically looks like a little diamond, kind of a light colored diamond, white, slight gray. I don't know what color that is. That's an aggressive trade, and that trade would be developed logically, intuitively in the logic of the program. It finds a trend, and if it can see an appropriate pullback over, say, 3 to 5 days, or on a daily chart, if it's a 1-minute chart, 3 to 5 data bars, some kind of an appropriate pullback. At a minimum, it'll look for that. And then the algorithm will look for a qualifier, if you will. Once it identifies the potential swing point where the trend should return or could return, it sets up that style of trading, and it will be identified on the chart with a triangle, that particular color. An additional style of ultra short-term trade is exactly what you see here on the bottom left is the ultra short-term Elliott wave turning point type of trade. Again, this one is very, very similar to the dynamic calculation, but it's just a little bit more time involved in qualifying that type of a pullback, where there's an appropriate price-time relationship of approximately anywhere from, on a daily chart, 1 to 2 weeks, for example. You'll get a quick pullback, you'll get a manageable, identifiable trend pullback, and it'll show up. And when it shows up in the color of magenta. Those two trades are very aggressive. They have higher risk associated with them because of the fact that if the market's, for example, right now a very mature trend, we could be in the latter stages of a trend where the potential for a reversal is heightened or increasing. The risk-reward challenge is more challenging. So those trades in general are going to be a little bit more cumbersome and a little bit more difficult. But again, for an aggressive trader, a highly motivated person wants to get in the market, this is what we're identifying for you. Now, the trades that about 75% of the people are going to be looking for would be what we would call the short-term swing trades. They're a more proper pullback, something that involves a little more time or a little bit more price relationship of a pullback. Short-term pullbacks would go on for approximately anywhere from, on a daily chart, it would be approximately 3 weeks up to about a month to a month and a half. If it's a day chart, it would take, a couple hour type of setup. The point is that it is a more a setup that has evolved a little bit more, and so there's less risk and there's a higher propensity or probability for success with that kind of a trade. It's something that gives you more time to prepare for it, for example. And so we in-house, we would typically look for we call that a yellow trade, or it's basically identified specifically as a short-term opportunity. And short-term is basically, if you're a day trader, it means that day it's a real quick opportunity. It could be a couple hours, could be an hour. If you're looking at a daily chart or something, monthly, weekly, whatever, could be something that would evolve over weeks and months or days. So typically it's more of a proper setup, and then from that it gives you a proper risk reward. It has a higher degree of success because most people can be prepared for that type of a setup. The final, or the most easiest trades, other than the yellow, would be the what we call medium term trade. That is the setup that has a little blue triangle. We call them blue trades. They are essentially something that is going to take more of a period of time. Sometimes it could be a 1 to 2 month type of correction. It could be a horizontal correction. It could develop over different manners. Within an Elliott wave standpoint, it's a bigger wave 4, if you will. And so those are going to be, like I said, about 1 to about 2 months time frames. They typically give you much more time, much more patience. And again, you have to still qualify the trade based on risk reward. So oftentimes you have more time involved in a proper price pullback relationship that makes the trend more capable of trending again. Like what we're looking at right now represents that kind of parameter. As I'm about ready to hit the enter button, we will see these trades show up on this chart or any chart that we change in the near future. Okay, I'll try to answer those, Gary. I may have to get back with you on some of those questions if it's related to the scanner, but I'll try to go through some scanners for you. So back to the example here. Oh, and by the way, if you ever have a question, you can always call into the office and talk to the support and get some assistance that way, you know, just to give you a heads up. We'd be more than happy to talk to you. If somebody here can answer, we know you can talk to the main man, the boss, and we do have people that will answer questions. Sometimes they're a little more challenging, but if you call in, you can talk to somebody live and get your answer more quickly. Okay, back to this L8 wave thing. We're now going to be looking for different types of trades on different time frames. Whatever you're looking for, we're going to set up the trade based under the L8 wave theory concept. It isn't even. I have to say that because a lot of people are not looking for. They're prepared or conditioned to look for wave counts. And here we don't have wave counts. We just simply have trading opportunities setting up under the rules and guidelines that go with L8 wave theory in general. But you still have to improve your ideas. As a trader, we can do things that can make these signals be better, more appropriate. We can qualify the trades. We can single them out. We can ignore them. There's ways we can heighten or improve our opportunities at any given time. The last setup is going to be what we call a long-term setup. On a day chart, that might take you 2 or 3 days to set up. It means it just takes a little bit longer. That kind of a correction, that kind of a pullback within a trend, typically we're looking for wave threes that are strong, whether it's an early stage wave three, mid stage, or latter stage. We still are going to have opportunities as long as we can see that the strength is there to support the trend. When the long-term trend indicator types of trades show up, typically it's in a stock or commodity or futures market. Something that has taken time to already have trended, and so it's an obvious opportunity that gets out of hand, and then all of a sudden it's a market that's ripe for more profit taking. And so the long-term algorithm is setting up for those. When they show up, that means it's had more than enough time to requalify the trade. The example I have here is going to be similar to that. It's going to be that type of a setup, either a blue or it's going to be an orange, is my guess. I haven't looked at this yet. And I'm not explaining this because many people that will watch this video, or who are 1 or 2 people that are new, are not familiar with this, and I want them to see the logic here. Within this setup, we allow for each person the ability to manipulate the data in such a way that it becomes more useful to them as a personal style of trading. What that means is this is not a black box system where it simply says buy here, sell there, put your stop there. It's not that kind of a system. It is a logical system that helps you visually see that there's something going on in a market, and it tries to identify the trading opportunity or the direction of the market trend, that where to trade, how to trade. It gives you a structure, but it doesn't tell you how to go about attempting to trade that structure. And so we allow for you conservative modes, which is what vast majority of people are going to use. We default to the conservative mode. If you are a highly experienced, very aggressive trader, been doing this for decades, you just want to get in and out, you by all means change these settings, put them and experiment with them, trade with them. If you're new, experiment with this in training mode, for example. Get familiar with it, see how it acts and reacts. And when you change the setting. But an aggressive setting, it simply means you get a more, in most cases, a lower entry, but a little bit more risk associated with it. The conservative mode gives you a kind of a range or a platform in which you can look for it may stab into the buy area, for example, on an uptrend, but it backs off. So it isn't officially a buy. So it's because it has certain rules. It has to close above the trigger in order to officially be confirmed. Aggressive mode will just give you a single line, and it will come in, and that's you have a more aggressive confirmation. But the risk is there, you may get in prematurely. Then there's something called a signal bar. For example, if you use moving averages or that nature, and you're using the tight trigger, if that's your style of trading, we do allow for that strategy to be incorporated into this logic. And then the final style would be something like a regression trend channel breakout, similar to that, and with a high Pearson's, for example. So different styles of trading for different types of people. You make the decision, you determine what's appropriate for you, and then from there, you now have to do some other things to improve the odds of this signal. The signal is just one system. From this, we're going to take other tools and studies, and we're going to try to interpret these signals in a more wise, efficient way. Secondly, there's also the trailing stop logic, and there's some things like you can display the entries, and you have some ability to change some of the variables in the chart if you so wish. There's more here, but I won't get into every detail. I just want to cover this in general, what we want to focus on this month, and that's the newer features and how you can use them more wisely and more productively. A loose trigger means you might want to stay in a little bit longer. You're willing to give up some profits, and so you want to use an algorithm that does not trail the stop more tightly. And so if it backfills, you still could technically not get signaled out or stopped out, if you will. You can still hang into the trade. So again, mostly I would just use the existing setups. But as a trader, as you use the program, you do see this program has the ability to be changed, adapted, and adjusted according to your style of trading and your preferences. So now I'm going to go ahead and activate this routine. I just hit apply, and I'm going to go and hit OK, and it'll disappear. You can see pivots here. That's mostly if you're identifying the swing modes, and you're trying to get some use for maybe Fibonacci calculations or some other type of technique. I showed you that, but I'm going to turn off the pivots right now. And I'm going to focus on just the Elliott wave right now. Here is a setup that has been developing for well over 2 months now. Earlier this year, approximately around February, or if you the one person in this class remembers this from another class when we talked about this stock from an Elliott wave standpoint, and around in that class we mentioned somewhere around February and March that we felt that the market was going to the energy field, the energy market, the energy complex futures market was going to have the odds were that we were going to start to see a trend. That's typically what you see seasonality wise, and up until about July 4th. And into July, that's typically when the demand for unleaded gas and crude oil and things like that dissipate and slow down. So that was reflected in the actual and this is a refinery stock, that was reflected in the behavior of refinery stocks at that particular time. As crude oil went up at that time, so did the refinery stocks. It became market makers anticipated greater profitability, and there was a strong move. The program triggered you long earlier, and then for some of us, myself and others, trading this using other techniques, we were able to stay longer. And but then the pullback phase came in, and so at this point, I got out. Others, I don't know what they did. Now I would like to still, from an Elliott wave standpoint, this appears to me to be, and from a technical standpoint, this appears to be, it's not a double top, not a triple top. It's just a well-trended stock, what we would call wave 3, and then a proper pullback. You'll notice on the data bars, most of these are bullish or red, green and go up types of data bars, and very few red data bars within that trend. Now, in the last month and a half, we've had mostly red data bars to the downside. That's why I decided to use the candlestick data bars today, so you could visually see that. Using Fibonacci, we can see this is a proper pullback. If you use things like Advanced Get or other types of Elliott software, you're going to understand what we're talking about here. Well, if you just are new and you just want to make money and you really don't care about Elliott wave and all that, it's a trend, and it's a proper pullback within the trend. That's what the Elliott wave turning point tool is designed to do. It's not to get you educated on Elliott wave. It's designed to get you in the right direction at the right time in a proper way. And if the signal or the setup fails to develop as it looks like in theory it should, then there's also a place we know that where we can cancel out or move on or just stand aside and reduce our exposure, hedge, whatever types of trading you might do with options trading or individual stock participation. So this stock here currently is entering the target, the trigger zone, and it has a trigger range. So it's not technically triggered long yet, but it is in that phase where it's beginning to build a little bit of a base. The program has now generated a buy setup, a buy structure. In the last 4 trading days, even though the futures markets of crude oil has gone down, we still see here technically that the individual data bars are showing that they're trending up. They're closing higher than previous data bars. And if this were to, according to this logic, it should at some point begin to trend toward the target zone. The target zone is the initial target for the most conservative trader would be the lowest level. The upper level of that range is the maximum target, or the target where once you get into that zone, you really need to protect your profits. You need to do something of that nature and be more aggressive at that point. Doesn't mean it can't exceed targets. You can see in this case here, it hit the target and it kept going. So what we want to do is catch the trend, and then if we can find a way to masterfully stay in that trend, that's fine. Or even a portion of a trade, maybe you buy 10 calls, and you still want to be able to try to keep 2 or 3 as long as possible. In this case, this looks like a wave 4 pullback of a bigger magnitude. So the minimum we would look for is a pullback somewhere in this range, maybe test the previous high, maybe exceed it. We're not looking for the previous moves where the trend was just beginning at the right time and at the right price, cyclically speaking. At this stage of the game, we just want to catch a nice trend. How can we improve this? Here's the logic. I know what to do now. I have an approximate idea what to do. What can I do to improve this strategy of getting long, and if I'm wrong, getting out, and how can I improve my odds? And that is where we introduce the next tool. This is what we've been talking about for the last month now. The next tool would be called the Tom's Strength Levels tool. It was designed to initially give us some information that a data bar, it's just on its own, can't provide. Data bars are nothing more than 2-dimensional images of what has happened in the market, in this case a day chart, on a daily basis. It opened at this price, it traded at this price, it closed at this price. That's all it is. And when you put that data together, you can develop a logic that says, I think I can trade this, it's bullish, it's trending, and so on. But we still don't know internally what's going on. These strength levels, what we call Tom's strength levels. Tom is the developer of Advanced Get. Tom is the developer of many, many proprietary calculations that have been used throughout the industry. And this is one of his newest tools. It's designed to help you look in a third dimension, what's going on in this market. Whatever you're trading, stock, commodity, futures, what is irrelevant. The data is, what is going on in that data? Is it gaining strength? Is it losing strength? Is it maintaining strength? What is going on? If I want to catch a trend, I need the energy to push that trend back into place. And I need to know approximately how long it might take. If it's really strong, then odds favor a quick recovery of the trend. But if the market's losing momentum, if the market is not, if it's going through a prolonged, complicated profit-taking sequence, if you will, then the lack of strength, I need to know that, because then as an options trader, I might have to do something further out. I might have to do more of a complicated spread strategy of that nature. So in this case, that's what this tool is designed to do. Give us a picture of what's going on internally. Now, I won't go into all the features in detail because I don't have the time. I want to spend the last half hour just showing you examples of what happened. So I'm going to speed this up, but I'm going to show you. There is one thing I would like to share with you that I haven't shared in previous classes. The one is a feature in Tom's strength levels called next higher time frame. That we have talked about. One of the rules is we want to cross-reference with your high hourly wave with the next 1 to 2 higher time frames. And I'll show you those examples as we get started with a review of the last few months, a few weeks of examples. But this is basically where it puts onto the indicator. If I click this estimate button, it's a green color that will show up on the Tom strength levels. You haven't seen it in the previous examples, but you will today. What it's doing is it's superimposing the next higher time frame of what that Tom's strength levels, what we call TSL level, would look like superimposed. And it gives us a better definition without cross-referencing necessarily looking at multiple time frames. It's just a quick, easy way of seeing is it still bullish or bearish from a higher time frame. When we're looking at a market, all we're doing is looking at a segment of it. In this case, we're just looking at, excuse me one second, we're looking at, we're only looking at this picture. This is the trend we're looking at. What happens is when you go to a higher time frame, we start to build a picture of what's been going on further behind that information. And so now what we're doing is we're looking even further out. And when we do that, it gives us more insight from a technical analysis standpoint. It gives us more insight into what's going on. We can now look at this stock with greater confidence that this thing has been trending, not just in the immediate future, but it has been trending it's just recently accelerated. But in the totality of its behavior, it's been developing a nice trend for a period of time, and it just the only thing it did recently was accelerate that trend. Very similar to last year, it bottomed out, and in the cyclically, when it was supposed to rally around April, May, June, July, August, that's when it began to trend again. So the reason why we put this on the Tom strength level is we don't always have time to look at multiple time frames and compare and contrast them. So when we go look at this tool today, I'm going to go to the Tom strength level and put it on for you. And we're going to show you what it looks like right now. This is going to give us a picture of what's going on in this stock right now at this particular time. And I'm embellishing a little bit on this right now because this is an idea that I personally am trading for. I'm interested in getting back into this, and I want to know, is this the time, the price, and the place that I can do that? Now, I might go do a lot more due diligence in the process of when this class is over, and I may not make a move today, but I am going to watch it with a very fine-tuned eye over the next 2 to 6 weeks. Because if I'm going to have an opportunity to catch a trend, it will be this summer. And as the fall comes, the odds are I'm going to have more profit taking. I do not want to, so I'm trying to time this. So I'm going to put the estimate higher time frame on, and I'm going to go ahead and okay this. Here is exactly what's going on from the Tom's strength levels. Just as a review though, the Tom's strength levels are nothing more than a kind of an oscillation similar to the price oscillators of the past. The difference is this is a little bit more sophisticated and weighted, and it's a more sophisticated type of indicator. And what it's really trying to do is it's trying to visually give you an idea, where are you in relationship to a trend in an early stage, mid stage, later stage, profit taking sequence setup type of stage. And that's what we see in here. We see indications. If it's a positive trend, then that strength level is going to be above this area. If it's a negative, this is a neutral zone right here in the mid-level. And as long as a strong trend is pulling back in an appropriate way, we will be able to qualify this as a setup to catch the trend in the direction of the strength. If it's a negative type of setup like right here, we would qualify this as a downtrend, even if it's a temporary one or a short-term one, but the opportunity is to the downside. Now, if you want to just get long, then this is also used as a picture of providing you information that this isn't the right time to try to just blindly go long, because the weakness is profound and it's too weak. The only way we want to trade this trend is when this strength or the trend is picking up and the momentum is picking up. And as we push into the positive area, in this case, we're going to see, when we get to the fourth level, you'll see that the third level up, the blue is kind of like a go, a warning, hey, go. It's like a acceleration. It's saying, hey, this is the most appropriate time to catch the trend, or in an early stage, if you will. The second level is a mid-level. It means it's catching on. Everybody's beginning to see that. It's a little bit of a safer way to catch the trend. When you get to the third level, it's more of maybe you buy the more aggressive signals because the strength is identified in the chart pattern. It's much more of a trade that has begun to trend for an extended period of time. So when it gets into that level, most traders that look at charts, not necessarily this type of way of trading, they're going to see this as a trend. They're going to try to go in and get it. Like right now with Google or with Amazon, I got out of it and I'd like to get in it. And as I look at the chart, it keeps going up. Eventually, I'm just going to buy it. That's what most traders do from a psychological standpoint. Things go and they want to catch in it. If they're desperate, they buy in. Well, it's kind of reflected in the strength level. It's reddish color. It still means it's on fire. It's good. However you want to define it, it means it's still an acceptable trend. By the time it starts to push into this fourth level, the extreme level, that means your odds of a correction are not necessarily imminent. As you can see here, it peaked early, but it does mean you would expect or anticipate a correction is valid and it's about ready to set up. So if you're in a trade and a trend, or you got really good options, improved values, and you're making some good money, what it does mean is you might start to want to increase your money management aspect of trading. You might want to make some tighter stops, take some profit off the table, do something of that nature, covered calls, whatever it is. You need to start thinking in terms of how would you protect your investment if the time decay and the acceleration of the trend peters out. So in this example, when it gets to the yellow, that's a kind of a caution flag. Like if you're racing around the Indianapolis 500, caution means there may be something coming up around the curve you don't see as a trader. Start to focus on being prepared for surprises. But it also means that it is either a setup is a pullback is going to develop at some point. You need to be prepared. Start to prepare for it. And in this example, it didn't occur immediately. Most examples, it does occur relatively quick. So then the rule of thumb is, as you pull back, you can see this line over there. What that means is on the higher time frame, it's also positive. And where it curves like here, it only curved very little on the higher time frame, which would be 2 time frames higher. That would be why this type of a setup would mean it was really nothing more than a wave 4. When you looked at the oscillator, on this setup, the Tom Strength oscillator, what it would indicate is you need caution prior to that, but the higher time frame was putting it into perspective. It was weak, but it wasn't massively weak, and marginally weak on a higher time frame. The trend still had sustainable energy behind it. And if you look at it currently on a higher time frame, that's what this line represents. It still has sustainable trending. It isn't negative and it's not weakening. So even though the current weakness is defined as weak, this is why Tom would say that the long-term trades are the most difficult to set up, and he typically won't take these because it's too much patience for him. But for me, this is a kind of a setup that I would kind of enjoy and appreciate because I'm patient and I do like these things. The thing is, this is lacking the integrity of a confirmation that the strength is there right now to push the trend up. So that's why they're harder to catch. But the longer term picture still is saying that this is a valid opportunity. It doesn't have it in the positive territory yet. Once it gets into the positive territory, that's when the momentum chasers come in and they chase things. But right now, it's risky, a little bit more risky than a short term long or a blue type of trade, the medium type of trade, but it's a valid type of trade nonetheless. So as I look at this, it's setting up an appropriate area, and if I'm wrong, I know that I have to cover or protect myself if it drops below 62. If the risk is appropriate with the reward potential, then I think it's a valid setup. I'm only embellishing on this one because I do think it's a valid setup. And one final thing before I go into a summation of all the recent examples and show you what they've actually done. Each one of the previous examples over the last 4 to 5 weeks, actually the last 2 weeks we did not have any class, but the previous month before that, June, we talked about Elliott wave turning points and how to cross-reference. We talked about Tom's strength levels and the importance of using it to help confirm strength or energy in a trend, how to filter out a signal. For example, if it's a short, like this one, this was a failed trade previously. So an aggressive trader would not have made money with this. He actually would have lost money. So we need to be able to filter that out. Well, as a rule of thumb, that happens. That particular setup, if you were highly aggressive, you would have lost money on that. The conservative trader, 80% of us probably would have just set tight and we're still winning. Now we're at the last level of opportunity. The risk is the lowest, and so here it's setting up. So guys like me, I'm now interested in it. But this is the parameters, and so the parameters are there. Now all I need to do is do my due diligence and try to figure out how to catch this trade. If it catches my eye, what can I do? I can go and look at a higher time frame, which is what we see here on the chart to the left. This is an example of I've got this set up in tabular form. If you look on the bottom, you'll see a weekly and a 2-day and a 3-day. So the 2-day represents one time frame higher from a daily chart. It takes 2-day charts, puts them together. This is what it would look like. What you need to now look for is how is the bigger picture? In this case, it looks like you still have, and not only that, from an Elliott wave standpoint, it's giving you a yellow signal. It's confirming that it still wants to get long. It's trying to get long. And it did the same thing prior to that. It tried to get you long, and that the most aggressive signal failed. And as it was pulling back, it just had not finished its profit taking. And it's still pulling back, but it's in the neutral zone. It's still technically set up. So the higher time frame confirms it, then it makes it more of a qualified trade. That's just one time frame higher. If for example, it was a topping action, and it would maybe reflect something different. If it was a short-term rally, it would reflect something different. But in this case, it confirms there is something to this stock. So I'm going to go look 2 time frames higher, which is a 3D chart, or three daily charts pressed together into each data bar represents 3 days of trading. And when we see that, we see a little bit more of the action. We can go back not just in the immediate picture. We can actually see not just this behavior, not even just part of that next previous one. We actually see a further amount, much more data. And from that standpoint, we see the same type of behavior. It pulled back, and we did get the new rally. We do get the warning. We did get the profit-taking sequence. It's still technically positive. And again, it still could develop into some, but it's right now, it's qualifying that time frame with a trade setup. Now that time frame has not been triggered long, but it's getting close. The difference here is the entry point is a little bit higher. Now remember, it's not confirmed until it closes above either both of these in this case, or if you change the setting to something more aggressive, it has to close above the triggering mechanism that you're using. And here you have to recognize the stop loss or the suggested cancellation if it's a bad idea. That's how much risk you're doing at this point. But your reward potential appears to be not just the same as here. It actually has a little bit of a movement that would take it up to about $90 or higher. So it's encouraging. It's a risk reward that looks reasonable. We just don't have quite the triggering technique right now. But that means you don't have a short anymore. You don't have a setup. Some of these we're going to look at, they're going to have shorts on the higher time frame, that cancels them out or makes them more risky. Here we have a trade. It's a yellow trade. Remember, the yellow and blue are the ones we prefer in general. They're less challenging to trade. You know, the blue trade back here was quite nice. The yellow is currently setting up. And what happens is if this correction continues to come down, we would then get a yellow trade, the next trade in line would be a blue trade in the future. So right now, that's why the mechanism is a little bit higher. It takes a little bit more of a due diligence, a little bit more of a higher entry. But the logic is it still sees that there's a trending capability or potential here. And so we see the pullback, and it's qualified. So, and then there's one more time frame we could look at, and in this case, that's the monthly, the weekly. The weekly just takes basically a 3-day, and it's a 5-day chart, if you will. And you could even, if you really wanted to, you could go even further. But now again, the same thing. It is now generating a smaller trade, an ultra short, for that time frame. There's smaller trades, more risky. Means that at some point in the future, if this fails, we'll come back to this over the next year and try to catch it again. Right now, for the next 2 weeks to 6 weeks is the window of opportunity for the daily chart. The higher time frame on all three of them are giving suggestions that there is an imminent or a potentially a trade set. They're all three time frames higher than this are looking to get long. They're not trying to get short. They're not giving you short signals. When those higher time frames give you a conflicting signal, that's when you use that to help edit out and maybe stand aside or make a small trade versus a large trade, things like that. It gives you the insight into the trade. So Elliott Wave helps us guide us into the possibilities of what to do with a market that's trending one way or another. Tom's strength levels gives you the tools to interpret that strength or weakness or correction phase that's going on from an Elliott Wave standpoint. The third tool that we've just recently added, and that we've talked about in the last, since June, since I've started doing this class, we've talked about we've talked about the option volume map. This is a relatively new feature. Again, if I had more time, we could go in detail. I really want to show you about 10 types of existing trades that have gone on that we pointed out real time, and I want to follow up on them before our class is up here today. And right now, I've got this set for basically 3 strikes above or below. What this does is it essentially takes what you might be looking at if you bring up an options chain, and you're looking at the 3 strikes above and below the at the money, for example. I might increase this one to say 6, just to give you a little bit more range possibility. And there's some things we could look for, but right now I'm just going to make it a simple thing. What we've now done is we've introduced the next tool, and that's called the option volume map. And what this tool would do is it would better qualify the setup itself. We have the strength indicator below, but now we actually have physical evidence of what's going on from a put versus a call relationship. It means if you're bullish, you want to see that there's more calls being purchased than puts being purchased. As we look at this right now, we can see that options are going to expire here in about 4 trading days on the 20th and on the near month. That particular contract, the current daily chart is not showing from an option volume map. It's telling you to be just a little careful. Even though I really like this stock, I need to be a little bit careful because I don't have, for the next 4 or 5 days, if I'm trying to trigger long, I don't have evidence that people are buying calls to get anticipating right now it's going to go higher. What I'm seeing is evidence that they're preparing for the opposite. So I don't have also on the strength level right now, as much as I like this, I don't have a positive oscillator yet. So this is a little bit of a challenge getting into this stock. I'm going to have to dig a little deeper and try to find some more reasons to get long. It might also mean if I want to get long, I might have to go further out into the future. If I'm an options trader looking to trade options to take advantage of this, I might have to go into a more of a spread strategy that allows for more weakness, but ultimately will allow me to get in say 2 to 3 months that what I'm hoping would happen. I hope it doesn't take that long, but that's what's going on right now for the next 4 days. I don't see right now. The option volume map is a tool that identifies each individual day. If you see the blue line that I just clicked on, each individual day, it shows what the calls purchased and the puts purchased on that day, what the volume was. You can do volume, you can do open interest, you can do price itself, and you can see, for example, price. If it's today, you can see the price of what's going on, the options price. You can see the strike price and so forth. And but I can also drag this icon, and it's a historical reference of what's been going on. A day ago, you were getting a decent amount of options on the near month, 2 to 1 to 2.5 or higher. The rule of thumb is if it's 1.6 or higher, then it validates the setup. And if you can see this continually over a period of time, if for example the previous 2-3 days, it's been a positive. You've only had 2 bars up. Primarily it's not enough data here, but it's transitioning still. And if I go further out, and if I look at the volume of the further out, it's still challenging right now as of today. I don't have enough evidence that the volume of bullish buyers, or the call volume, is enough to say that this is preparing to push higher. It's still a challenge. But if I see this consistently, that's what I need to deepen my ability to take the trade. For example, if the trend's there, cross-reference higher, if everything's coming, and then the volume supports it, then that's my last information that I would need to be able to get long. So that's the tool. And then one final thing we've talked about, group rotation. If I find, for example, that the group that this stock is a part of is bullish, then that would help improve my odds of trading in the up direction. In this case, because it's an oil trade, oil related, oil and energy, natural gas and heating and crude oil, so on, the oil sector itself is still neutral. It has been a very difficult transition for the last 2 months. The oil sector is neutral. It's not even showing up in the group rotation. So I don't have evidence that, and if I go and we're able to find refinery stocks and compare the individual refineries, the individual groups, I have very few right now that are except pipelines. I don't have evidence that the institutional traders are purchasing energy in any significant, meaningful way that's bullish. So I don't have that warning yet. So I point this out because this is something I'm going to follow up in the future. I'll be on vacation here pretty soon, but by August I'll be able to follow up on this. It is a valid setup, and it's what we've been doing in the last month or so, trying to qualify these types of setups. Now, in the last 10 minutes I have, I'm going to go through some examples of exactly what we talked about today, and what we talked, except we talked about them on certain dates. I'm going to start with June the 5th. On June the 5th, we I did my research. I looked at the matrix, looked for some ideas, and I picked the best ones. And on June the 5th, I mentioned B stocks, 8 p.m. And if I could go back in time, let me put this down to a perspective. If I can go back in time to June 5th, if I had time, I would put these in the training mode and try to simulate for you. Oh, I'm sorry. I'm on the wrong one. June the 5th. This is June the 12th. I'm sorry. This is June the 12th. Let me do June 5th real quick. This was a stock that was setting up on the 5th, and this is the setup in the training mode. Let me go into the training mode right here. Go back to the 5th. This is what the setup looked like on June the 5th. And as we talked about all the things, we said we highlighted the TOM strength levels. We went back to the volume map at that time. Again, we don't have the current volume. I wish we could find a way to keep historical data once it expires. We don't have right now the ability to bring it back up. If we could do that, I could compare that. But at that given time, we did have the support of a setup where The option volume map supported the volume. The Tom's strength levels were there. 2 time frames higher was supporting the same kind of setup. To get long, if we can see here, so there was a setup here as well. Right here is where the so we had the confirmation at the same time. The blue was confirming 2 rooms higher. The option volume map supported it. In this case, I showed you a probability envelope, and it actually gave you an area, and we actually went into it and we showed the strategy builder, how we would go ahead and send this to a strategy builder, and how we would create the options for it, possibilities, and why it chose July, not June, for example. That was an example we went over. And these are the suggested strategies based on where you clicked on at that time and price, which would be right around this date. So that was an example. And so as we go into it right now, I'm just going to advance it. That's where it currently is right now. So it got to a certain point, and the trigger, it's currently still triggered long, but it's right there, right on the edge of being stopped out if you use the logic there. Now we actually have strength there. So this stock is still in play, if you will, for an aggressive trader who might want to still own, say, 10%, 20%, quarter of his position. If you did some call options, I'd still have, a few of them around, a couple of them around, because I still think that we're there. Now, if it breaks here, we're gonna run out of, we're gonna get stopped out of that. So if I go to the current day right now, I don't have really a lot of insight, but I see that the volume is extremely low right now. It's transitioning. I really don't, but basically it did hit the target. It's gone to the upper edge of it. It hasn't changed direction yet. That was the one we were looking for, a trigger. EAT was another one. We had a trade setup right here. This one was a blue, and it hit the target and it exceeded it, and then it subsequently, since the June the 5th, it has subsequently it started to develop a little bit more divergence from the previous signal right here. Now we're starting to show a little bit of an angular divergence, so there is a little bit of concern. It could be this trigger might be a little bit challenging, but it's technically still a proper trade to get long. It has hit the lower end, but the volume right now is it's sort of okay as we get close to expiration here. But again, I'm not looking at a new trade. I'm just saying that this is what it did was it did hit the target. It's now showing a little bit more risk in the future. It's starting to show a little bit of divergence. But if we go to higher time frames, it still is something that as we go into the next few months, this is still a strong trend that has, for some, potential to catch the next signal. Right now, there is a signal that's in play. And so that one hit the target. RHT was another one. Here is an example of why we also want to go and add one more feature. You right-click in the program, and you will see another feature called earnings. I mentioned this to you in the previous class. And I said that the earnings is a tool that we put in because we got tired of looking up every week. I would spend hours looking for earnings setups and trying to warn my boss and let them know that this is going to develop. Here's a stock you like. Hey, the earnings are 3 or 4 days, and sometimes the earnings weren't confirmed. So what we did is we spent a lot of time and energy, and we found a way that we can keep track of earnings. It takes a lot of the guesswork out of it. Earnings are a more risky time to trade markets. They can be very lucrative, but they can also be mostly hurtful to you when you're in a good trade, like, for example, Netflix, and all of a sudden today it comes out with earnings, it opens down $60. Fortunately, it rebounded. But it's still a challenge to trade with earnings. Here's a setup, and we actually look for in the case of this tool, go to earnings. This is a tool I've mentioned over the last month or two, and you can see here we can actually click on it. It'll turn a line that tells you when the earnings have happened in the past, little reference line, and when it's coming out in the future. So now, right now, there's no earnings coming in the near future, but what we did, if we go back into time and we look at these trade setups, this one hit its target, but it did not go any higher. And at the same time, when we look at our oscillation that was helping us get long in the June time frame right here, it was only a quick trade, and the reason why it was a quick trade is it was already showing weakness building over periods of months. It has not grown any stronger. Very strong trend, but it's starting to show evidence that it's plateauing. Then earnings comes out and it surprises people, and what happens? They got out quickly, and now it's starting to look for trades in the direction of the downward direction. So it's not quite through correcting in this particular phase of corrections, but it is beginning to set up at some point in the future, longer term. We do have evidence that this transition, this is a stock over the next 3 to 6 months, has good odds of eventually, over the next 2 quarters, has good odds of recovering that trend. Right now, it's in a corrective phase. It's got divergence. It's not time to go long. It's actually, the tool is, if you're bullish, you have to be careful. Unless this trade fails and you see it go higher, I would say it's a candidate for another short in the future. But so sometimes you have to protect yourself. In this case, you had the triggering stops, a trigger right up here just before earnings. Thank goodness. And right here's the last trigger. So you got stopped out. If you were using the algorithm, you would have been stopped out, or you would have taken your profits. You would have maybe moved your options out all the way at about this point, because the trend is weakening. It's no longer super strong, and it might be evidence of a top. But most importantly, the earnings it's too much risk. You bought it too high. You've only had it for a short time. So, anyways, example, it did the trade and it did work out, but it's also an example of money management and how the program is designed to give at least that information. Since I'm out of time, I'm going to go through the rest just quickly to show you what we looked for, and not explain all the details, but just give you an example. One more for the fifth, DO. DO was triggered long. It's still struggling. It's one of those I'd be out by now. It technically got out, but it did at least get to the target zone. A small, couple dollar move. It hit the target. And those are just the blue ones. If I had time, I'd talk about. This was a yellow trade that we talked about on the 5th, ISRG, and it's still holding steady. It's still technically okay. It hasn't been stopped out. HD, Home Depot, was another one. We did get a yellow signal, and back on the the 6 would be right here, 5th 6. It hit the target. It's backfilled. It's giving another signal. It's still technically okay, but it's starting to get cumbersome, and so you need to. The risk reward is challenging. Again, it's still technically trying to stay long or get long. So that was, and then MA was the other one. Technically, so it's hit its targets. It's still real close to being stopped out from that time in June. Actually, I'm sorry, June would be back here. So we would be, this would be right now. That one, that's probably not a valid one right now. On June the 12th, we had ADM, and on June the 12th would be right around this window here. The 12th would be right here. And so it has moved to the target. It backfilled off of that. It generated a new target. It's still maintaining some integrity. The oscillation has improved, and it's still showing something sustainable to the upside there. The downside is we do not have, from a weekly time frame, we don't have the confirmation, but when we go 2 to 3 time frames, we do have confirmation of the same type of direction. The weekly does not have the same logic. So this is a more challenging one. But the trade did hit its objective. The next one, PANW. Again, if you go back on June the 12th when we talked about that, it hit the goals. It hit the first level, backed off, and it moved again. It's a challenge right now what to do with this one, but it keeps trying to go long, but it's getting tricky to maintain. From an options strategy, it's not trending in a powerful way. It's just maintaining control of an upward bias, and it would need to get And you can see here as you go a little further out, we no longer have uniformity in the bullishness. It's actually mixed here right now for the next month. But again, it's achieved its objectives. LCRX, example of a short. I'm sorry, this one June the 12th. So this one had already occurred, but I think that was just probably an example of something appropriate. I was trying to find an example of a short. It's still holding low. It's getting to the point where I would stand aside now and I would wait for it to rally, and then maybe look later on, see if there's another setup. It's not no longer. It's too risky to short anymore. The yellow trade again, yellow trades, long strength there. Just write these symbols down and track them yourself. Try to do your own follow up on it. But it's still technically trying to be long. LMT, an example of a quick trade that hit the target, but now it's reversing a little bit. And as we go into June, that was the 12th. Now we go into June 19th, which is getting closer to the 5th was when I first started. Second week was the 12th. The third week was the 19th, and now we're getting closer to the current time frame. Example of a blue trade that was to the downside, hit the target, worked lower. Weakness is still there. Whirlpool, an example of a blue trade that hit the first level. It's now currently bounced up to a little bit of a positive, but it's still trying to get short. It's a challenge right now what to do. It's technically still weak and vulnerable for more weakness. We're going to want to watch earnings coming up here in the near future and see what happens. If it weakens again, that trend's lower. Whirlpool's going to go lower. But if it can transition here, you could get a bounce. Odds are it's not going to recover yet. So this would be a challenge. I'd just wait till new earnings. Raytheon, on the 19th, I talked about how we use rotation, and the thing I talked about was defense stocks. All but one of the defense stocks at that time had sell signals, and you can see here with Raytheon, it did go down, and we still technically have some sell setups going on, but we're starting to see a little bit of a transition in some of them, like Lockheed Martin, for example, is rebounding. So the uniformity in the decline strengthens the signal, but when they start to differentiate between each other, it could be an indication that the current setup is beginning to, the rotation is now up. So if you go to group rotation, for example, you're going to see that aerospace and defense is showing up in here. It's now getting blue. That's evidence that, if you were short on the 12th, the 5th, and like Lockheed was on the 12th, the 12th was Lockheed Martin, and then on the 19th we talked about GD and Raytheon as short candidates, and at that point they were all good. Right now the transition says that profit, if you're short, you don't want to be short right now. Your rotation is such that it could still go short now on earnings after the earnings, but now you just wait for the next time frame and see what's happening. The rotation's pushing it up too much. Bottom line, it means institutional people are buying it a little bit too much, so it's not an easy to sell it here right now. RNET, again, a short example that worked, and it's still logically trying to get short, but it's still in play for short possibilities, and the earnings are not imminent in the near future, so there's still some weakness here. GD, I don't know if I did that one. GD's sort of similar to Raytheon and the other one. It did push lower than you thought. It's still technically defensive. It's not giving you a reversal yet. But I would stand aside right now, not be too aggressive on the short until after earnings. And if it rallies, then maybe rethink it later. Right now, it's still it's no longer rotating to the downside. If we go as I'm winding up here, I'm going to go into June this 26th, which was the last time we had this class, and we'll look at CAR, CAR. That was a stock we pointed out as a blue down. And if we go back, we can see it did exceed it. It pushed lower, and we still see that this stock is generating the more aggressive types of shorts. Weakness is still there. The earnings are not an issue right now, and the weakness is still showing up on the current strength bars. I would stay short at least a little bit if I had done that trade, and in theory, and for educational purposes, I would still be net short. I would not be accumulating longs yet. I would, a very aggressive trader. I'm not an aggressive trader, so I wouldn't be short in this, but it's still technically in play for the downside. PISA, we talked about this one on the 26th before it was news with that guy, the CEO, founder, coming into play, Papa John's. But we were able to identify in that stock in the program really decent types of trades. And the odds are, it's no longer quite as negative, but the odds are it's still a valid candidate for maintaining a low. And unless this thing can move above the 58, 59, so it's right about the 60 area, I would be inclined to still be net short somehow, some way. I think that's what I'm picking up right here. For the next 4 days, you're getting a little bit of a covering of shorts. You're getting some call option right now, a little bit more than the puts, but technically that was what we talked about on the 26th as a short candidate. The long candidates, SPPI, we could see here on the 26th, that was the signal we had, and we can see that it currently is it's hanging in there, and it's actually still strengthening. This SPII is technically it's exceeding our potential, and it's not yet giving up the ghost, so to speak. It looks still valid, like for maintaining some semblance of a position if we got long on that one. And this energy stock, EOG, kind of defies the market in general. It's holding its own, but it's no longer powerfully long. The last two signals have hit their targets. The one that we looked at on the 26th, and then prior to that was another one, but it's a challenge. I would be careful, and if you're falling in love with that. Technically, the last signal got stopped out, so I would be out of that one. I'm running out of time, so I'll just do a couple more quick examples. These are real-time examples. These are not something I'm just pulling out of the wind and trying to show you a perfect example. These are things we talked about and why, and it was based on Elliott wave, the wave system, the tool here that we're covering, cross-referencing, TSL interpretation, option volume map, and then rotation was what we did. So Dollar Tree was on the 26th, and it was a short yellow, and it hasn't really done anything since then, but it's still technically in play. Doesn't have massive weakness right now. The higher time frame supports that the potential for still some more weakness. Earnings is not an issue right now. Technically, you could hang in there a little longer if you are so inclined. This trade also a yellow from just the 26. It's not still powerfully weak, but it is technically gravitating to that direction. And again, it's a coin toss, but it's technically still in play. And then two oranges that I'll finish up with this. And Gary, I might have to have you email me your question, and I'll email you back. I think I can email you. If my email would be marcus@dynamictrend.com. If you were to email me those questions, I can get right back with you tomorrow and answer those for sure. I think you asked me some similar questions a few weeks ago, and I tried to get back to you, but I don't have your email, so I needed you to email me, and I could try to give you a concrete answer on at least those scanner types of questions. If that's okay, my email, marcus@dynamictrend.com. Just send me the email. I promise I'll get you the answer. One way or another, I'll help you. I'm running out of time right now, so but that's basically the lesson for today. And again, I'll finish up with just one last current example for today. Actually, if you have time, I'll give you 3 new setups to watch for. Netflix is not a setup, but it's just following up. I mentioned it on the 5th. It's a stock I love. It's a stock I've owned for years. and but I do not have any short-term trades. And the only thing I'll point out with Netflix is because it's an example of it's an earnings. It was in the news as of last night's close and into today. We're now going into earnings season, and that you'll notice here prior to in April and May, very, very good blue signals. After that, we haven't had anything in Netflix. And coming into earnings, this is an example where you do want to pay attention to stocks during earnings season. It's possible you can use spread strategies like, oh gosh, my brain, straddles, strangles or straddles or strangles. It's possible you could use those types of options ahead of the expiration if the volume and the range is potentially there. But in this case, as far as the Elliott wave turning point goes, there was only one quick trade, and it was just prior to expiration, and it actually got stopped out actually just a day before 2 days ago. So it got you out of harm's way before, and thank the good Lord that you would, if you were using the program and you had not been paying attention and you didn't know earnings were coming out, like I didn't until just yesterday afternoon, because it's technically just beginning to pick up earnings. This tool is doing exactly what it was designed for. It would have gotten you out. Right now, what I would do, I'm pointing this out because the volume is strong today, even on down news. It gapped down about $50, $60, and it's only weak about $21. But I still think this stock is a little vulnerable right now. So personally, as a trader, I'm going to be watching this over the next few weeks. I will be waiting for some of those ways to get long, or if it does rally in the short term, I might take advantage of a real quick short on it in the next week or so. But in general, it's vulnerable right now because of what just happened. And if you go 2 time frames higher, there's no new trades. It needs, from an Elliott wave standpoint, it needs to go through some profit taking. Whether it's horizontal, vertical, it needs to do some profit taking. But so watch this summer, and I'm going to say by the next quarter there should be at least one more trade opportunity to get you back in the right direction before the next earnings.